Ed, are you 21?
I am.
Excellent. Well, at least in the US.
At
We
least
can
in the
give you
US.
this case. It's authorized.
Great.
This is a case on beer. And
lovely.
I think we're going to have some fun with this one. It's a McKinsey case. So I'm going to direct you through the case. But part of my judgment is still going to be based on whether you get where I'm going before I go there.
Perfect.
So, just McKinsey style is naturally rigorous, very analytical, but still I'm going to tell you where we're going and when.
Okay.
And so, other than that, I'm basically just ready to dive in. Great. So our client is a beer maker. They've been in the beer industry for nearly 90 years. The company's original focus was on the artisan beer market, but over time they expanded their product line to become a multi-million-dollar business, and less than now 5% of their sales come from artisan beer. The beer market in the US, which is the relevant market, has been decreasing by 2% over the last 20 years, and our client's beer brand has been sadly declining at the same rate. Despite having a strong passion for the beer brand, the company has not paid much attention to it in recent years. However, events last year brought the company's focus back to their beer brand because they saw a decline of 15%, despite selling 10 million bottles, while the market declined by only 2%. Our client wants to understand what happened and how to grow the brand back without lowering profits.
Okay. So just want to make sure I'm following you here.
Great.
Our client is a beer making company, and they've been going pretty strong for 90 years. Originally focusing on that artisan, maybe like IPA kind of focus, whereas now they are probably a bit more traditional beer, not as focused on that. That's less than 5% of their portfolio. The beer market, you said, was that 2% over the last 20 years or 2% each year?
2% each year over the last 20 years.
Okay, wow. So really has been just slowly declining. That's probably with the introduction of seltzers and popularity with cocktails and all that stuff. But last year they decreased.
Don't forget wine.
And don't forget wine, yes. And last year it went down 15% despite them selling 10 million bottles. Bottles or dollars?
Bottles.
Bottles. Okay. So now we want to know, how can we grow this brand back, but also we want to maintain profitability. Is that correct?
Yes, that's right.
Okay, just a few clarifying questions to make sure I have the scope right.
All right.
Strictly in the US, no foreign.
Yeah, so
German
they are
beers.
all over the place, but our focus is going to be on the US market here.
Perfect. And are we looking at any sort of pressing timeline for this matter, or are we just hoping to come up with some ideas to get into place?
What do you think?
I would think after a year of 15% decline, we're probably pretty time sensitive.
I agree.
Okay, great. Well, do you mind if I just take a minute or two to
Go ahead.
my thoughts? Okay. So I've segmented my thoughts into three main categories. I think first and foremost is internal. So really looking at a lot of the financials here in terms of the costs, the revenues. If they've decreased in 15%, and I didn't catch whether that was profit or revenue.
Yeah, let me just go back and we'll double check it together. The 15% was the revenue.
Was the revenue?
Yeah, market
Okay.
was 2% revenue. So
Okay.
2% revenue.
Well, cost still could be a driver, but it seems like revenue is the biggest thing. So with that being said, despite selling 10 million bottles, tells me it's not about the quantity, it's about the pricing. So I'm imagining immediately, my initial hypothesis is pricing is needing to change.
Okay.
With that though, before we jump into that, I'd love to talk about the market and the consumers.
Okay.
So with the market, there could be different competitors. Maybe they've changed their pricing if that's what we're focusing on the internal side of things. There are also maybe more regulations. I know maybe there's some laws that could be signed, or some things that have added in taxes or added in various obstacles for the client. And then also maybe there's been some bad PR, whether that be with the market in general, in terms of just people maybe not wanting to drink as much because of some sort of, I don't know, maybe they're really cracking down on, there's been lots of drunk driving accidents or something, and people are maybe taking a second look. Or also maybe it's an actual bad PR specifically related to our beer brand, in terms of maybe we had an incident in one of our factories and all of our beer was ruined and it still went out or something. In terms of the consumer, not a whole lot here, just maybe in terms of the preferences. I know we mentioned that earlier, in terms of maybe they're looking for seltzers or for wine or for other things. And That doesn't seem like it would be top of mind just because the market has been steadily decreasing, but last year was almost catastrophic. And so, yeah, I think I'm ready to jump into any area in particular, but if you have a certain direction you want to take this.
Okay, awesome. Right now, if I told you to take one action to fix the business, even though obviously you have no data, what would your action be?
It would be to change the price. And I'm not going to specify whether I would increase it or decrease it.
You have to.
I have to?
Well, of course. Mm.
Okay. If we still sold 10 million bottles last year, but we lost revenue, I don't think lowering the price is going to help that, because I think we were already selling a lot of bottles, so I would increase the price.
Okay, awesome. So our team shared some data gathered about the competitive landscape. So I know that was one of the pieces, the second piece that you wanted to talk about. I think you're going to be pleased. There's some of your first category that's in here too. So we did interviews with advertising experts. We examined customers' ad pages. We identified an amalgamation of what was happening in the market. And interestingly, the client really didn't know some of this information. And what it showed is that our marketing spend and theirs has not changed significantly, but there are significant pricing changes that have happened in the industry.
Good to know.
And so I want you to take a look at this and just see what conclusions you think we can draw from this table.
Great. So what I'm looking at here is we have our client, and then we also have, it seems like we have two competitors who both have a premium and an own brand. Do we also have a premium and an own brand, or do we just have one brand?
Our main focus is just on our own brand.
Okay.
Sorry, on our. We don't have a premium brand. We just have one brand.
Yes.
Some of the other ones, their own brand is going to be either a core brand, or they are stores that have, for example, their own label or style of beer.
Okay.
I don't know if you can reference other stores that you know of like that. But,
yes.
Yeah.
Okay. So
we have a single brand.
Gotcha. Okay.
We have not identified it as premium, own, or other.
Yeah. Well, I may just try and identify it right now. I'm seeing that our cost is much more in line with the premium, both with competitor A and B, and less in line with their own brand. They actually hadn't launched their own brand until 2022. However, we were the cheaper product, even compared to the premium. But now what happened is in 2022, it seems like competitor A and B have both launched their own brand, which is significantly cheaper, about half the price of their premium brand. Now, the issue here is that those are at $10 and $20, and we're at $15. So we're not really in one or the other. We're kind of straddling. We're a little bit too expensive to be an own brand or a cheaper brand, but we're not expensive enough to maybe justify the prestige pricing of a premium beer. And so perhaps aligning closer with one of those two might be more beneficial. Okay,
love it. Again, how does this verify or negate what your hypothesis was earlier?
I think we are more in line, and at least with our costs, in terms of the premium brands. So I think raising our price to approximately $20 would be a better way to increase our revenue.
Okay, awesome. And if we did that, what else would you look at in order to evaluate whether or not this was a good idea? What would be the math that you would want to do? Okay.
I'd want to look at the units sold, because if we're making more money but we're selling significantly less, it might not be worth it. But if we're only taking a small decline in the amount of units sold, then it will yield more revenue.
Okay. Well, I'm not sure what you'll determine as a small decline, but let's take a look at some other information. Yeah. Our client believes that if they increase their price to $20, they'll be able to sell 8 million bottles. And the cost of producing the beer are 75% variable and 25% fixed.
You said 8 million if they raise the price?
That's right.
Okay. So I just want to make sure I didn't miss any numbers there. We know that 75% of the cost is variable, and it says, you said it was $8 to produce?
That they are right now going to sell it for 8 million. In fact, let me bring that exhibit back, because you can reference that if there's data from there that you need.
Perfect.
There you go.
Yeah, so it's $8 to produce, and we would sell it for how much?
20.
Okay.
You recommended that, didn't you?
I did. I'm glad you remember my recommendation. Okay, so before I even jump into math, I just want to give you a hypothesis in that by raising it to 20, we're raising the price by about 33%. and we are only decreasing our volume by about 20%. If we sold 10 million last year, yeah. So if we're only doing that, then the math is likely that we will increase. But I want to give you an exact number, and I want to walk you through my calculations. So let's go ahead and just calculate how much it's actually making now. So we know they're selling 10 million, and then we know that it costs 10 million units, correct? So 10 million units, and we know that each of the units costs $8 to produce. So that's 80 million in terms of our costs. We also know that we're selling it for $15. So that is 150 million. So we're profiting $70 million as of right now. Now, if we look at our I guess, alternative option, which is to increase the price to $20, we know that we will only sell 8 million. Now, I just want to factor in this variable and fixed because we want to know what our contribution margin is per beer bottle. So right now, if we're making it for $8 and we know that 75% of the cost is variable, that means we're paying a variable cost of $6 a bottle. And that we do have $2 multiplied by our 10 million or $20 million in terms of our fixed costs. So no matter what, we're going to have $20 million of fixed costs. So now what we can do is we can multiply our 8 million units by the cost of $6, and that is going to be 8 multiplied by 6, and that is going to be 48. So it's going to be 48 million as well in costs. So our total costs are $68 million. Now let's look at our revenue. We've got 8 million, and this time we're multiplying it by $20 a bottle. So it's 160 million. Now 160 minus the 68 is $92 million. I just want to make sure that adds up. Yep, is $92 million. Which is an increase of our current profit of $70 million, which is great. And I think that's definitely something we should keep looking into.
Okay, awesome. If we can't capture it, should we still do it?
If we can't capture the
If we
8
can't
million,
capture the full, 8 million. Yeah, exactly.
I'm happy to calculate a break even if maybe that's easier in terms of how many we'd actually need to sell.
Okay. Not necessarily. I'm just saying, what would you think about if we couldn't, right? Because obviously if we can, great. But
Yeah.
What if we can't?
Yeah, I think the caveat there is can't capture the 8 million could be anywhere from 7.9 million to 0 million, right? And so knowing a more accurate version of how many people we can expect to capture would be really interesting. So even if we just spent a little bit more money in terms of really researching our customers and competitors, if we could capture even 7 million, we'd probably still be close to that current profit. But I think the biggest thing here is the actual branding itself, right? If we tie it back to the beginning, it's not just about the internal factors and the actual revenue. It's about our competitors, our customers, the regulations behind this. And one of the big things here is what the customers think of our brand. Because if the market keeps continuing to decline, then there's a chance that it becomes more polarized and that the people who still choose to drink beer and purchase beer over seltzers and wine and hard liquor will align more with one company. And if we also join that premium beer route, and then even if we wanted to launch an own brand as well, that not only opens up the possibility for more revenue, but it also closely aligns us with what our competitors are doing and hopefully can allow us to compete in a better environment.
Okay. I have one more question.
Yeah.
So here you talked about maybe identifying a break-even point, but what would be some of the things that could help us explain to customers or support a price increase to customers that would help us capture that 8 million or more?
Yeah. So we're just looking at, you said ways
to explain or support to customers, right? Because we can just show up tomorrow and change the price.
Yeah.
That's one way to do it. But imagine that we were trying to do something that kind of, supported this price increase. What are some options for ways that we can think about that?
I think number one is going to be how you market it. You could say, oh, we're increasing the price because we want to make more money. No one's going to want to get behind that. You need to give them a story and something they believe in. So if you're increasing the price because now you're a premium beer and you're in a beautiful bottle and you use only the best ingredients for the best tasting beer, that's going to be something that customers are much more likely to justify. Because, and I feel like I use this example in a lot of these cases, but think of the iPhone. The iPhone is only marginally faster than other Android phones and its counterparts. But because it's priced so heavily, everyone buys into this idea that it's better and it's a higher quality. And so there is an element to this prestige pricing almost of, if we can really show, look at this beer, it's in the most beautiful bottle, it's incredible.
So you're changing the bottle or not changing the bottle?
I think if we can do it without incurring too much more cost, if we can do it for the same cost, but we can have it maybe just a different shade of green or of brown or whatever color we want the glass to be, and we can have it be more premium, or we can change the label and the fonts to associate it with a more higher class beer, that's going to be something that could really increase the reception in terms of the price. However, I will say with that, you have to be careful, because if our current customers right now, again, we have 10 million bottles that people have bought, and if people are doing that because of how it looks and because of what they like, changing it to this high and mighty design might be almost counterproductive.
Great. Would you do the price increase all at once?
I think it could be interesting to do it over the course of 1 or 2 years. We did just suffer a massive decline, so I know that there's probably a timely manner associated with it. But I think that all of a sudden going up and seeing $5, an extra 33% increase is pretty painful to the eyes. So maybe just over the course of a year or two. But again, the risk with that is that if they're buying beer, for those customers who are buying it once every 2 or 3 months, if every time they go, it's $1 more expensive, they're going to think, where does this end? And that might drive them away. So just being careful on when we would do that, whether it would be commit to it all at once, or I think do it over the course of a much longer period of time. Fantastic.
Okay, final recommendation. What would you think?
Yeah. So obviously looking at the story here of facing this 15% decrease despite selling 10 million bottles, I think we have to increase the price. And whether or not we do it immediately or we do it over the course of a long period of time, it does need to increase, because I think lowering the price would not help us. With that being said, I think some next steps are to do maybe some more customer surveys in terms of figuring out the branding behind this and how we can actually tell our story to the customers and have them back us in this price increase. And then just be aware of the risks that this price increase, if done in the incorrect manner in the terms of the actual execution, could harm what we're actually doing here and could lower the amount of reception that we get to this idea.
Fantastic.
Thank you.
Okay, Ed, McKinsey case, how did it feel?
It's good. I do like this style of case where it's not getting your hand held, but it's someone pushing you in the right direction, whether you like it or not. Of course,
we all love that, right? Yeah. You definitely know if you're off the right track.
You do. And this was good. It was a fun concept, and it's always interesting when it comes to these price changes, how many other factors there always are, because obviously I neglected to think about when you would make this price increase, but that's a whole other conversation. We could have a whole case interview on that itself with exhibits of, oh, do you do it immediately or do you do it over 4 years or 3 years?
Totally.
And so I thought that was really, really interesting.
I did too. Well, let me just walk through, overall, I thought you did a really good job. So I'll grab this back and I'll kind of talk through it as I go through. First of all, this was a pretty hefty and actually a very numerically driven case introduction.
Yes.
And I thought you did a really good job of capturing everything. And also that one clarifying question was super smart, right? Was it, right, saw the decline of 15% despite selling 10 million bottles. So we knew that it wasn't volumes, but it could have still been revenue or market share or something else. And so you helped clarify that, and that set the baseline for everything else that we were going to talk about. So, so that was great. One of the things that we didn't do in this case that could have been included was just a diagnostic on the decline.
Okay.
Right. How did we get from A to B on, where the price went down? And one of the things that was really interesting is that it's actually not super evident even in the cost numbers how we got there, because when we saw that later, right, 10 million bottles, that doesn't seem like it was a big shock for us. the decline of 15%. The market declined only by 2%. We don't think lower our prices, but you know, doing an understanding of that would have been maybe just another way to think about it. But anyhow, I gave you a 4 for the recap and a 3 for the clarifying questions. I thought that they were really good. I felt like you could have maybe explained why you were asking them, tying them to, hey, we're going to need to put this in the structure. Your case structure was excellent, creative, but still very numerical. And I thought that it helped really address the issues in the case and felt very tailored to the specific issue. This first question on the exhibit, I thought you handled it really nicely. There is probably math that you could do. Of course, with McKinsey, there's always some kind of math that you'd want to do. And so, you know, you kind of came up with the directional focus, but I would just say, if you wanted to take a little time afterwards to think about, hey, what math could I have done there? That could be great. Then I pushed you should have pushed yourself on what should you do and what would you want to test and pick a number. You were like, well, we could raise it or we could lower it. No, don't hedge with McKinsey in particular. Don't
just
hedge,
pick one and go.
Right? Just say, look, this, we'll figure this out in a minute, but here's where I would go. Yeah. And so you were constantly kind of trying to be like, well, we could do this or we could do that. Of course we could, Ed, but I'm paying you a couple $1 million as McKinsey to not do that for me. Right? My whole team does that. That's not what I want you to do. So ultimately I thought there could have just been a little bit more directional clarity when you were moving from piece to piece inside the case. Math was great, good insight. I thought the offer for the break even was very thoughtful. Don't ever offer. I almost took you up on it, even though I didn't have the math myself.
I was ready for it.
I know you were. And I like that readiness, but I also was concerned that it was going to move us off the point.
That's so fun.
And I think that you already were getting the insights that you needed. So saying, look, what we could figure out is what break even point is our kind of risk minimal option and how secure are we with a confidence level on that. Right? You don't have to offer to do the math, but you could say that we could do it. Yeah. And that might just be a better way to propose new math inside a case. And then finally, I thought this question about the adding support for the price increase, I really wanted pros and cons for each one of those because you had really good ideas, but I thought you brought them in at the end. But then, if we change the ingredients, however, we could have a new cost. If we change the bottle, we'll have redesign and remarketing. If we change X, Y, or Z. So what are we looking for? We're looking for the best trade-off or the least amount of negativity, right? And so creating me a framework that explains how we would think about something like that, I think could really advance your thinking there.
Great.
Other than that, any final questions?
No. Thank you very much.
Great job.